I'm going to shift focus and connect with the management of Bajaj Auto. Rakesh Sharma, Executive Director of Bajaj Auto, joins us now. Mr. Sharma, good morning. Thank you for joining us. Uh, things are looking good. Growth is back. Margins are 20%, and market share is intact.
Well, market share has improved, but yeah, for the moment, things are looking good. I hope they stay this way.
Historically, we've always seen that rural economy acts as a barometer of the two-wheeler demand. But of late, we've seen two-wheeler demand coming back despite a slowdown in the rural economy. So whether I look at the monthly dispatch numbers of Bajaj Auto, TVS or Hero MotoCorp, sales are coming back and the rural economy is yet to come back. Why is that history is not repeating itself?
First of all, that assumption is flawed to begin with, in my opinion. There is nothing like, a divide for two-wheelers between rural and urban. Some of the most low-priced vehicles, two-wheelers, are bought in urban areas, and some of the more expensive motorcycles are bought also in rural areas. It is about segments. I would rather look at different segments, the 100cc, 125, 150cc segments to understand what is happening in the market. But dividing it between rural and urban for us does not make so much sense.
We spoke to you last time. I distinctly remember we had this very engaging conversation when we were in Pune, or when I was in Pune. Your view was that things for the domestic market will stabilize and things on the export market will pick up, and EV launches is something you are excited about. Let's look at all those three factors. Are we in for a year of positive surprise for the domestic market?
Yes, I think things have stabilized, not just stabilized, they have improved since the last 2 or 3 quarters. The domestic market is turning in a nice growth. We expect the markets to be growing at about 7 to 8% in the coming year, with the upper half of the industry growing at perhaps 2-3% points more, and the bottom half growing at 2-3% points less than the average of 7 to 8. So it's looking like a good sort of year to expect. There is consumer optimism. We can see that reflected in the loan tenures which people are taking, the penetration of retail finance. There is more certainty of income. So all these indicators are quite positive for the domestic market. When it comes to...
Yes, please.
Yeah. So the next was, you had asked about exports. Exports, we had expected the industry to start picking up, but that pickup has been rather slow. It has definitely bottomed out, but there are 3 or 4 markets, which are unfortunately large markets for us, where there is still trouble, and things will take a little more time to stabilize. These are places like Nigeria, Kenya, Bangladesh, Argentina. So what we have done is, for our FY25 planning, we have taken a very sanguine view of these troubled markets, and the rest of the markets, which are mostly in ASEAN or Latin America and little parts of Africa, we are seeing a good recovery in these markets, and we've taken a very aggressive view in these markets. Added to that is some new markets and new segments which we are entering. Brazil is going to get unlocked with the plant, local plant coming on stream in June. And, we are expanding our footprint in Europe next month, etc. So when I put all these things together, a very, very cautious view of the troubled markets, a slightly more aggressive view of our recovery in the recovering markets, and our progression in the new markets and segments, which also include, for example, quadricycles in Egypt, I would say that FY25 can be expected to be better than FY24 in exports.
Sure. So, Rakesh, looking at the two-wheeler industry construct right now, and let me add three-wheelers as well in here, more pertinent to your business, who's going to win the battle eventually? Is it going to be on fuel efficiency? I mean, you already have a CNG bike launch. The world is talking about moving to renewable energy sources, and that goes for autos as well as a segment. Or is it going to be purely on, affordability and durability?
Well, first we have to separate out two-wheelers and three-wheelers because three-wheelers are largely commercial vehicles. They're used as you know, taxis. So that's driven by a very different set of attributes. But in two-wheelers, if you take motorcycles, if you take a market as large as that of India, which is, we are clocking now 9 lakhs to 10 lakhs motorcycles per month. Obviously, there is no singularity which is driving the markets. There are segments in such a large market. Obviously, segments start to appear. We have a bottom half of the market, which is largely driven by fuel economy, mileage, those kind of things. And we have the upper half of the market, which is, people wanting to buy a better bike, features, and then right at the top is the, I would say, performance-driven, style-driven market. So, it's a mix of attributes, and it depends on which segment you decide to focus on. So I won't single out any particular attribute which if you conquer, you will be able to win big time in the market. There's no silver bullet.
Synoter of all eyes has been the CNG bike. Do you think we will see that switch to the newer technology? And on the sales front for the initial years, can you give us an assessment as to what you're expecting?
Well, like I said, the bottom half of the market, the 100, 125cc market is largely mileage conscious, fuel economy driven. So with the CNG bike, we are taking aim at this market. This is about almost more than 500,000, almost about 600, 650,000 units market. And like I said, it's driven by fuel economy. So with the CNG bike, what happens is that the fuel bill for an average household drops by almost 50%, which is quite significant. Even if a person is driving 30, 40 kilometers a day, 25 days a month, then they end up saving 2,000 rupees, and that's quite a bit when you take it at an annual level. So it is aimed at that. Now, almost 70% of the industry is covered by the CNG infrastructure. As you know, the government has been rolling out their CNG program very, very effectively. 70% of the districts are covered. And so therefore, one can say that almost 70% of this market has got CNG availability, though it will require a slight shift in behavior in terms of people going to particular pumps, etc. And what we are doing is that along with this promise of having the monthly bill, we are also packaging in the proposition comfort and a standout style. So it's not just about, buy this product and you'll only, I think it'll be a product which people will be very proud to own. And we have seen in three-wheelers, for example, that wherever CNG three-wheelers enter, almost within 2-3 years, the diesel and the petrol three-wheeler owners shift to CNG. So it is pretty attractive proposition. So we have hope. We are first going to launch in Maharashtra and then state by state roll it out.
It appears that the flame subsidy for the two-wheeler industry may not continue. In the light of if the flame subsidy does not continue, what does that mean for the entire EV two-wheeler industry?
Well, obviously, each 1,000 rupees counts, but you have to factor in this point about the FAME subsidy already having been reduced considerably. If you take March, when we had the full FAME 2 subsidy, and you take April, which is now just about getting over, you will still see, if I add these 2 months and divide by 2, you will still see that on the average, the industry continues at a healthy clip of 80, 85,000. It is nowhere near the very breakneck speed at which it was growing, which was also due to the base effect, because the base was smaller. But the customer has switched on for EV. Now, I may not buy an EV when I'm going for a purchase of a two-wheeler, but I'm definitely considering it. What we have found is that everyone has got electric in their mindset. Now, they may have a range anxiety, or they may find it too expensive, or they may, for whatever reasons, they may not buy. But people are very, very alive and open to this proposition. Added to this fact is that cell prices have been coming down. So to some extent, they buttress the impact of the reduction in fame. And so therefore, given the consumers' drive or interest in adopting EV, and the fame subsidy getting mitigated by these lower prices of inputs, I would say that the penetration would still continue, though not at very high rates, but I would say a 25% growth in the EV industry, two-wheeler EV industry, can be imagined.
Two follow-up questions, and this is 2024. Let's use a time machine, literally a time machine, and say we are in 2030. And let's look at the three categories in which you currently are present. Number one, two-wheelers. Do you think the traditional two-wheelers, which is the ICE engine and EV, they will have equal market share, or EV in 5 or 6 years could be higher than the ICE engine?
I would say that the EV would be still a bit tad lower than ICE, because there are certain strong propositions still for ICE, and by the time this whole right now the EV is cannibalizing scooters. Scooters are driven like 30 to 50 kilometers per day at the max. And there the range anxiety doesn't kick in. But the moment you have to start going to 60, 80 kilometers per day, inter-town traveling and all that, then there is an issue. The moment you have to, when you are going to increase penetration of EVs, the whole charging point about, people living in apartments and finding it difficult to charge, those kind of constraints start to come in. So I would say that both EV and petrol, gasoline, and CNG and ethanol, we will be quite fortunate that I think that all of these four fuel types will coexist.
Okay. The main cost for an EV vehicle, whether it is two-wheeler or four-wheeler or three-wheeler, is the battery cost. Looking at the R&D which is happening in the battery space, it's safe to assume that battery cost should come down. So do you think progressively by 2030 EV prices could be much lower than what they are right now, if all things are equal in terms of other input like metal and steel and plastic?
Well, I'm no expert on this subject. And for a long time, the battery costs are driven by cell costs, and the cell costs were coming down progressively for a long time. And it's just that they had a spike in, I think, 2021, 22 and 23. And then again, they've started to come down. So I think there are a multitude of global factors which are driving the up and down of the cell cost. So it's very, very difficult to predict. In addition to that, you also have alternate technologies like sodium or hydrogen cells, which are on the horizon. When you take a period like 5-6 years, they would probably be getting commercialized in that time horizon.
Final question. Actually I saw the movie Time Machine, so I'm playing with it. Sometimes I'm taking you up, sometimes I'm taking you back. I'm going to take our viewers back right now. Let's say 20 years ago, Bajaj Auto did one big change. From two-wheelers, from scooters, they moved into bikes. Then you put in an export lever. Then you moved into what could be called as luxury bikes or premium bikes. And now you're opening up the entire EV space. 2030, what do you think would be the dominant core of Bajaj Auto? Will it be EV? Will it be scooters? Will it be exports? Or it will be something new?
Well, you're right in tracing the history. This is like we say the third or the fourth version of Bajaj Auto, from scooters to motorcycles to exports and then EV. But the strength of Bajaj Auto, if you see that FY24 was a year of records. We had the highest ever revenue, highest ever EBITDA, highest ever PAT, highest ever three-wheeler volume, highest ever KTM volume. And this record was set in a period where, as you know, the overseas market were in a real tailspin. And this is where the strength of Bajaj Auto comes. The whole architecture of Bajaj Auto is that it's divided into SBUs, and it spans a whole lot of different segments. Today, it is very difficult to plan and predict and anticipate where the opportunities will come. It is not possible to precisely plan. But what one can do is to be prepared and is to be positioned well. And that is why our SBU structure, which focuses singularly on the motorcycles SBU and the three-wheeler SBU and the exports SBU and the premium bikes EV SBUs. And we have an array of almost 60 models, starting from $500 going up to $3,500, $4,000 per unit. That's the kind of spread which we have. So this gives us a very broad interface with the market. Now, our whole objective, strategic approach is to be positioned very well, have a broad interface with the market in our sort of focus areas, and then respond very fast to market changes.
Good having you on board. Thank you so much for taking time out and joining in and giving us an all-round view as to how things are shaping up for Bajaj Auto. So that's the management talking about, as of now, there not being a divide between the rural and the urban markets, at least when it comes to two-wheelers. And they are looking to expand their footprint in Europe. 25% growth in the e-two-wheeler industry is what they foresee.
If you like this video, then like, share and subscribe to ET Now.